Hello, 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 everyone. August is done. Good afternoon, Davey. Good afternoon, Patrick. Mike. We're not going to chant my name. No, 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 no. We're going to say the markets always go up. The market always go up. The markets always go up. I'm just here to help everybody through the process of learning to trade and invest. So we don't need to chant my name. Don't even want that. Hey, John. The market becomes boring. I wish it was a boring market. Generally, boring markets are up. I didn't think today was boring. Didn't think today was boring. And September? Oh, I don't think we're boring September. You know what? Boring and September don't go together. Boring and September. Thought stonks just, well, only the stonks go up, John. Well, except for, I guess we gap down, BBBY. Got by the dip. It's going to the moon. No, the market, everybody knows stocks just don't go up. What happens when they break the June lows? Hey, Dan Jet. How low can we go on the SPY? Retest a June low? We'll easily retest a June low. I mean, I'm from a fundamental perspective, I'm expecting us to tag 3K in the S&P. So divide that by 10. That's going to, it's going to be a mess at some point once this really starts unraveling. Evening, Anissa. Let's start off by now. We can all hit the thumbs up button. I completely agree. And newer people, let's subscribe to the channel. Keep the channel going to get good information out there to help more and more people. That's the goal. Everybody else, you know what to do. Hey, William. Hey, Options 22. Hoping the September monthly candle is a tall red one with a little wick on top. Are you positioned bearishly, George? Wow, large. It could very well end up that way. Why do you want the markets to go down? Actually, I'd love the markets to go down. I love to get out of this complete insane valuation bubble. Let's get back to some sane or undervalued markets so we can get some good long-term investing setups. When you buy at elevated financials, on elevated fundamentals, your long-term returns aren't as good. That's why I would like the market to correct and get out of some of this excess, get some of this washout, get some of this meme garbage stonk mindset out of here, get some of this mindset of the Fed's always going to save this friggin' market, and let's get a good, solid bottom, because the longer we continue in this BS kind of stocks always go up, just buy every dip. As long as we continue in that, it makes trading and investing even harder. And we need to get some of these zombie firms wiped out. We got a ton of zombie firms out there that have relied on cheap money and not produced crap all besides, dumbass returns for people chasing growth stocks. But there's no real fundamental solid crap out. It just needs to wash out. Great 3 window dressing days, super weak. It was weak. So far, what would you say this correction is? It's sideways to down. I mean, we haven't even been able to get a nice bounce. Is why I was looking for the bounce today, but what do? We analyze both sides of the market. Why? So you're prepared for anything. No matter what you think might happen, you gotta analyze both sides. And the worst case is you just sit it out. Or you don't mess with your short position if you're George. We want to make money. Bull market is always fun. Bull market makes trading and investing easy. But again, we got to get back to some sane stuff. You start new bull markets from getting this crap out of there. Otherwise, we could end up in a choppy, crap all market that makes it even harder to trade. I want it to go down so I get a life-changing all-in entry. And again, there might not be one entry, but you love like the bottoms after the dot-com bust, the bottoms after in '09 that are even retest. You know what? Those are the kind of things, and then you can trade around longer term positions. Then you can go back to, all right, we can watch for those dips, we can watch for those pullbacks, and there's great things we can do around those. There's fantastic trading. I can't wait till we get back to a bull market because there's a whole bunch more that I can teach, especially using some options, especially using, all right, let's do some cash secured puts to get in stuff, or just bank the money. Then let's do some timing with some covered calls. And then, you know what? There's some great things to even amp up your returns even more. You're not going to do a lot of that in this market. Hey, Josh. Hope everyone is doing well, too. All right. This isn't going to go as long as it did yesterday. Just let you know I have some things I got to take care of. Where are we sitting? We don't really need to go through all the crude stuff, although the slight build, we're way behind in distillates. The build in that crude slight draw. Crude, by the way, did stop that double top. Bostic, I guess, going to be speaking now. Tomorrow, though, tomorrow gets real interesting. Tomorrow and Friday. So the week's not done. September 1st tomorrow. So we could get some repositioning on stuff going into tomorrow. We got continuing jobless claims. Magic number, I believe, Patrick, 1456K, right? We're going to see if that hits, and that's just something we're tracking for another recession confirmation indicator. Doesn't have to happen tomorrow. Just pointing that out. We have 15 minutes after we open, we have the S&P Global Manufacturing PMI final. Let's see if that's still in contraction and how much. I mean, it's still an expansion and how much. And that's the smaller firms. Then we have ISM Manufacturing PMI. That's your larger firms. So we have that. But again, bigger the components on that ISM Manufacturing price is dropping from previous forecasts. But let's see how that comes in. And then the employment. For previous dipped into contraction. Let's see if we're still in contraction as forecast. Then we got Bostic speaking 30 minutes. And then remember, Friday, non-farm payroll Friday. Pretty much a bloodbath unless you were in some medical stuff or Meta. Or I guess Comcrap or Netflix. But a lot of it was pretty red. Lots of selling coming in today still. 70-30 for the 75 basis point. Still, look at this with the negative gamma. We are in decent negative gamma. Also, let's see if this comes up. Key strike. All right, this is for September. Remember, September quarter end. We'll have quad witching September. We got big. Look at so far. Look at this amount of expiration at the 4,000 strike. So that is major resistance now. What's interesting is the next major magnet's down at 3,900, then 3,800. But 4,000 is very key. So that is very key resistance at this point on any rallies. And your gamma flips close to 4,200. So even on rallies to 4,000, it keeps us deep in negative gamma. Just jot down that number. Just don't lose sight of that 4,000. It's pretty hard because it's 4,000. I didn't even look at anything after the close. So if anybody wants to say something about it, whatever, I've been too busy. Tomorrow, though, Campbell's and Hormel. If you want to be a student of the markets, I I look into those just from how the consumer and inflation and what they're seeing in guidance comes from, because those are considered pretty staples. People still have to eat. And whether they're saying how they're passing along inflation pressures, what they're seeing down the pipeline. Tomorrow after the close, we got Broadcom. Lululemon has been a fun play in the past. Have no thoughts on earnings, though. Friday, and then we have nothing for non-farm payroll Friday. Let's see. Well, I'm glad you're here to provide roadmaps around the landmines. Just trying to do my best. Also trying to show everybody that, again, you can think something, you got to prepare. I thought we might go into at least a slight bullish rally today. Nada. It's why you see me doing the same stuff. Preparing. If you take one thing away, it's preparation. Look at the key stuff. Don't get into either full-blown. You could be full-blown bearish, but you also have to be prepared for rallies. And to sit there and just being silly bullish at this point, yes, we will have bullish days. But we're trading, if you're trying to just be bullish every day, you're trading against the patterns. And I know we were asked, let's just do a quick look. I mean, let's just take a quick look. Next major cluster. Interesting enough, the weekly 200 now is about 35.56. And then my next key target is about 34.84, and I'm talking longer term. I believe we will take out the June lows. I'm not saying it has to happen in the next couple weeks. It could easily happen in September. 34.80, 3,500. And then we got 33.50. And then we got 31.60. So those, just a reminder, and if we look at this monthly, let's take a look at that month. This is the last day of the month. So we had big red June, big green July, decent topping bar for August. Still not closing below the 62.5 though. Also, that monthly 50 is right by that June lows, so we could easily come down there and get a little bounce, and then once that's taken out, weekly cycles, let's just do a little recap. Weekly cycles still not at the bottom. So over at least the next few days, going into next week, at least mid next week, we could see downward pressure. Key level still 38.99 on the S&P. Daily, still pinned. Remember how long we were pinned at the top? Now we're like pinned at the bottom. Not hitting that, hitting this minor harmonic 39.54. What was the low? 39.53. Next level 39.39. Theoretically could be hit overnight tonight. Then key 38.89, 38.86. Hope your long-term portfolio doing well. My long-term portfolio is a lot in cash. Other stuff, it's other than it's playing to the short side some stuff. It's in cash, a lot of cash. You know, you don't have to be, and I'm talking stuff that I'm waiting for opportunities with. Now there could be more put to work on a key close below. Once we hit this final head and shoulders target and close below 62.5 on any rallies, you remember we can get more put to work. Patrick with the magic number 1456K. Patrick's got it in the notebook. Took a small position in UAL today when it broke previous major support highs. Your thoughts? We can take a look. Let's just peek into that now. Who cares about the rules? We'll still do our analysis. Let's just peek in. Took a small position in UAL today when it broke previous major. Oh, you went from the short side. I think you got more downside ahead. You're right at some major support level. So if we see, hopefully you have a little wider stop on this, or you're trying to get really nimbly. Once it really breaks below this mid 34 area, you got some pretty strong support in here. So just keep that in mind to chew through. The key major area you want to watch for. So if you're ratcheting down stops, once you really get below this 34 area right in here, this 33.90, then you can get some significant acceleration to the downside. So you know what, either you got to trade this with some wider stops, or it'd be wide or really tight for me. Why wider? Because if we do get a bounce, I'd be watching for the next rollover play. The key stop level that I would be using on a closing basis is about 39.80, maybe even 39.50, somewhere right in here. As long as you don't close above there, it's a completely valid short trading a breakdown pattern. I couldn't have too tight a stop on that one, though. And longer term, I think you're easily going to see a retest of these lows. All right. Let's see. The NASDAQ. The NASDAQ inside bar from yesterday with a down close. I just have to update these because we have a pausing bar, which just reinforces our 12.16 to 126, sorry, 126 to 128. Next major target area. 12,004, stop reduction, 11.9, take profits on a head and shoulders trade. Ratcheting down is still your stop. Not much else to talk about overnight. Would not trade. By the way, let me jump back to the S&P real quick. Hitting that down. Let me take off a couple of these. Would I be trading this as a double? It is valid, but let's check it is valid from a bottoming perspective. Yes, this can be traded as a double. There's no guarantee it will even confirm or trigger. And it is against, you know what I'm going to say, against the daily rotation zone. But what is interesting, let's say you get a rally on, it's a %B buy above today's high, and it would trigger a double, and it would only trigger the move back to the daily rotation zone. And I'd be really focused on the second target, especially lining up with the key close on the S&P. So now, does it, because it's a %B buy and a double, make it higher probabilities? No, they're independent probabilities. What's interesting is it's probably going to be about the same exact trade. So don't get mistaken when people say, unless they've tested it out, oh, I have multiple signals, whether they be bullish or bearish, it's got a higher probability. Unless you tested out those combined signals, it's a false assumption that a lot of people make. %B buy also above the high for today in the NASDAQ. This I would not be trading as a double with this big hitch in here, and because your first target with this major hitch in there, would not be trading this as the double. And look, even your first target's right there. So how would you trade this? You trade this, you could trade this on a break above today's high with the end of this little mini move. You're into a clear path move here. And then you get above this high, and it could probably be an easy, I start watching for a front run about 12,483, then start trading it into the clear path. So you don't need the double formation on that one. To the downside, you break below today's lows. I already went through the targets. Did I do them for the S&P? I don't think I did. For the S&P, let me just lower these since this is the pausing bar I have to use at this point. So my next target area, unless you want something shorter term, you just use your little reverse harmonics. Uh, 39.38 to about 39.33 are the next mine targets to the downside. The Dow, let me just lower this since we've hit those. This will just give me the next to downside. The Dow next target I'm using 31, about 31 390 to about 31 367. This just, I'll take a look at that later. There's your peak on it though. Let's see. So we rally after the head and shoulder? Not necessarily. You don't have to. It means once the targets are hitting the head and shoulders, it means the pattern's over. We'd also, if you target that and close below the 62.5, it favors more downside. Does that mean you can look? Could we get a rally tomorrow off the S&P? Yes. Could we trigger a short-term double bottom that takes us back to the daily rotation zone? Yes. Could we do that without hitting the full targets on this head and shoulders? Yes. Could we go down tonight and hit this next target area and invalidate this head and shoulders? Yes. The only thing, we don't have a little short-term pattern reversal yet. We sort of have on like shorter than that little 4 hour. You don't have anything shorter to time frame than that. Does that mean you can't rally overnight? No, but it would just be a little itsy bitsy trade. Just because you hit a target does not mean you have to rally. It means you filled the pattern as tradable. You could keep going down. We could hit this and tank. Or is everybody like, are we going to crash? So, no, you could hit this, close below that, and then 2 days later be down here. You could hit this, rally. If you're playing long term, I'd be playing it from the short to the short side, even after these targets are hit. If you get a reversal pattern, you play the reversal pattern if you want, if you're trading shorter term. If you're not going to play the reversal pattern, you can at least use the targets on the reversal pattern to watch for new short entries for another rollover play. There's many ways. It depends on your time frame, your duration, your portfolio size, how active a trader you are. There's lots. That's why I don't just cover one thing on this channel, because we have some people trading literally. There's a couple of people who watch this thing trading over $10 million portfolios. There's some people trading here who have 10K portfolios or 50K portfolios. It depends. You're going to trade them slightly differently. And there's people who only do trades that are longer than a week or two. There's lots of people who only do things that last monthly, that trade leaps and stuff, that are watching for the major signals. Mike Lucky 45X on when they went public as his research has got on my radar. Strong swimming against the current, closed above 37.5%. TA, please. I'm going to start charging you guys. TA, I'd be trailing my stop. There, I'd be trailing my stop. This thing's very overextended. So, I mean, you're right up there, 130, 131. This thing's... There's your key support, right about 121. I would not be, if you're, I mean, I assume you're already long on you want the monthly, you're breaking out. I would watch for a pullback though to reposition stuff. I'd easily be watching for a pullback between 121 and 109. That's a pretty big window, but this, as overextended as this is away from that, you're getting divergences up here. And as long as this didn't trigger a significant reversal pattern, yeah, you can keep playing it because it's breaking the monthly highs. I don't like personally, I don't like chasing stuff when it's this extended. I'd rather long manage stops, watch for a pullback. That's my personal preference, especially if playing options. Look, you look at your 12.5% right there. That's that 121 with the daily rotation zone. That's the minimum level I'd watch. And the bottom is right here at this key reversal bar at the 25, 112.59. But I'd give it a possible little more room, even down to 109. So I'd be watching for that. And then this is exactly where on a pullback I'd use something like a percent B entry. So remind me once we get a pullback. Please go back to 2007 on the monthly. Yeah, there's your 2007. I don't think you're going to return there. This is pretty juiced, and the fundamentals aren't. I'd be surprised if you got above 150. Let's just see where the overall. Oops. Let's see where the overall harmonics retracements go. Look at. Oh, let me revise that. I'd be surprised if you get over 164. That'd be a pretty strong magnet if it keeps running. So if I had to structure something, if I was in super bullish mode on this and I had to structure something with a longer term options play, I'd be using this 160 to 165 strike area for a upper strike, especially on a pullback that held this. And you can see it on the monthly. You don't really want it to drop both below these two top areas. How would you recommend most people watching this channel look for trades? I know to watch the sector reviews to identify where to look, but what would be the next steps? Well, it determines what you're using for entries, what your entry parameters are. You know what I like to use. So I like to target the stronger sectors for longs and the weaker sectors for shorts. And then for longs within those sectors, I like to target the strongest stocks in the strongest sectors. So that's the way I do it. So you can filter just on relative performance. And then I go through and I watch stuff. Like I watch for things that are trending. Let's just take what's up here now. Has this been trending? Yeah. So I start watching for pullback entries. Especially, all right, it broke above major resistance. Let's just use this as an example. So we're going to watch for some pullback entries, which there haven't been a lot of. The most recent significant pullback entries, besides doing a breakout from the key resistance, was back on the 24th of August. So this is the kind of thing I watch for. Let's just take this case. I like watching for Resumption of trend. So this is pullback into the daily rotation zone. Happened to also be a percent B buy, triggered with a rotation up from the rotation zone and a percent B buy. Longer term, you want to know what I watch for longer term? What do I like longer term? Let's just take the bull when it's easier when we're in a more of a bull market. Like with Apple. Bull market, I watch for weekly rotation zone entries and percent B buys. Right here. Right here. Not one there. Right here. Right here. Those are the kind of things I like for longer term entries. So you have Apple in a long term uptrend. Rotation zone positive on the weekly. So I watch for pullbacks and then your buy patterns. For shorts, it's pretty much the opposite, but a lot of people don't like to short. But again, shorts, I'm a little more conservative. I watch for topping patterns, like head and shoulders and Apple top. So, like right now, I'm still bearish on tech with the breakdown. Things like Nvidia coming down almost to the second target, double top pattern. Apple, head and shoulders pattern. And when those things are done, I wait for another setup. I don't try to override shorts. Don't override shorts. Don't overstay your welcome in shorts because you can get the rip your face off moves. So that's what I like to do. And then what am I going to be doing coming up? Once we start nearing a major market bottom, I'm going to start really doing some key fundamental scans for stuff at really good fundamental valuations that are also putting in longer term technical buy patterns. And those are going to be bottoming patterns. And if I'm still live streaming then, we'll go over stuff like that. Please do UNG. You still above yesterday's high. You still have one more day of an aggressive rotation zone entry with the trend. It'd have to be on a closing basis above yesterday's high. UNG, finally, daily cycles are at the bottom, finally, but weekly still at the top. I'm starting to watch in natural gas anyways for the slightly bigger pullback before another sustained rally. So this would be one on a buy that I would manage aggressively with a stop to the upside, because we could put in a topping pattern up here and then get the bigger pullback, which I'd love for a bigger pullback weekly entry. For example, this was a weekly buy back on the 11th of July. And look what we've run since then. So I'm going to be watching for this would be an aggressive daily buy area. It might not even trigger tomorrow, then it's off the table. I'd prefer this thing to easily pull back again, get some more, get at least back to somewhere in this weekly rotation zone, get a new buy pattern with weekly cycles dropping out of the top, and then play it to the upside. That's what I personally like. Because I don't mind missing a trade. I hate chasing trades. Because then, unless you're trading it nimbly. For example, If this triggered tomorrow, it's got a tight stop, a really tight stop. So let's just walk through this. And I don't know if this is going to trigger. I'm not giving you a specific trade. I do not know your account or anything else or your risk tolerance. But a close above, or again, this could be played intraday on a break, and then if it rolls into a close, then it would be a short-term up play. The key level is 31.74. The stop would be naturally right below the rotation zone and the low from August 30th on a closing basis. All right. So if that triggered, what am I going to be using for stop raising? So it's going to trigger here. Well, we hit the 50% level of here. I'm going to start raising my stop. Why? Because between the 50 and the 62.5, we could get a rollover play. So I want to start raising my stop. So if we stall out here, because we're at weekly cycle tops, I've reduced my risk. We get a close above the 62.5 on the daily. Again, I'm going to raise my stop a little more on a closing basis, but then what am I targeting? A return, especially to this key candle open, 34. And as we're going up there, because we're in weekly cycle tops, I'm going to keep raising my stop and unwind something up here. Now, let's say it triggered and we came up here and rolled over. Boom. Hits a stop, I'm out. We break down, sitting on my hands. Why am I sitting on my hands? Because we're most likely going to break that daily rotation zone. Look where the 50 is, 28.50. Let's take that on a weekly basis. 28.50 is right into the weekly rotation zone. What happens once it starts getting into the weekly rotation zone? I'll start watching for weekly cycles to get out of the top, especially once they get to the bottom. I'll start watching for entry plays. Then I'll start watching for weekly entry plays, or more aggressively, if there's a good daily play, then that could be in this area too. So based off where it is now, it is still holding. See this? Resistance. Tested there, came back. So far it's holding. But think about this. So yes, it can keep going up. It could easily keep going up. That's why it's still a valid play. But do I want, if this closes below this daily rotation zone, do I want to be holding this? No. Why? Not only did we close below the daily rotation zone, we also have closed back below this key support. And it is overextended, so I'm watching for the bigger pullback trade. Watching for the bigger pullback trade. When the bigger pullback trade hits, it's a whole new ballgame. Does that make sense? You're welcome, Dr. M. Does that make sense to everybody? Well, give me some feedback to let me know. I hope I didn't lose people with my logic and the way I approach stuff. Options 22, so that was my question. Now over 37.5 odds favor. The next area I would use would be that 50% harmonic. Again, and that's for the longer term. Oxy, finally getting the pullback. See, this thing could easily... The aggressive entry now would be in the rotation zone above today's high. That would be the aggressive entry. Personally, with cycles still at the top, I'm watching for the bigger pullback in this, especially with oil killing that double bottom. I'd love this thing to pull back to 65.74 area. 65, this prior thing in the 50% retracement back in the weekly rotation zone. Get cycles out of the top, holding this. The other thing, if you're trying to build a position that can be done, is you can it's what I've talked about with trading around the core position. So you can say, okay, let's pretend you didn't have an entry and you're really bullish on this. All right, if it gets above here on a closing basis, I'm adding half my position. Then if it pulls back to this other area and gives me another buy signal, I'm adding the rest of the position. And I'm going to base a stop off the combined position. And the stop would be easy because it would be my 62.5% on the closing basis. Why? Because if we close back below here, we're favoring a return to here. So that's the easy stop if you wanted to subdivide a position. But then that's not called cannonballing. Cannonballing is when you've already gotten in your position and you're just trying to go, oh my gosh, it's going against me. I got to add and hopefully average my cost down so it'll turn around. This is saying, going into the trade, saying, all right, if I get a buy signal here, I'm going in 50%. And then I'm going to manage that. If we go lower down to a key area and I get the next buy, I'm buying it. I've established my full position and I know where my stop is on my combined position. Remember, there's many ways to trade. I'm trying to give you different examples. And I hate chasing overbought stuff. All right. Would any NASDAQ S&P rally only go to a Friday low since Powell's speech is priced in? Would it only go to... I mean, Friday's low is key resistance. Would it only go there? Well, let's take... I hate just saying that because it's price. I can't use that logic, George. I can't use the logic because it's priced in. I got to do my analysis. So on my S&P, if we rallied, I'd be looking at this double bottom target, which is just around that area between the second and third targets. Could we go higher than that? Sure. What do you think my next target is if we don't make a new low tomorrow? The next target would be 41.40, which would be the 50% of this down move. And anywhere up in here, especially with the hooking over 50 again on the daily, or I mean on the weekly, I'd be watching for another rollover play if we did rally that high. Could we rally that high? Yeah. What do the probabilities say at this point? The probabilities say 40.70 is major resistance, especially with the daily rotation zone. So what would I be targeting? This 40.58 to 40.72 if this double bottom does trigger. And that wouldn't be because I'm thinking stuff's priced in. It would be based off the patterns. I can't target what I think's priced in. Now, on pure technical analysis also, Friday's close is very key. Between Friday's low and close is going to be key. And you see, we've already tested that area twice, and it's been rejected. So this is major resistance up here. But is it because it's priced in? No, this is just pure technical analysis. Priced in is a mental construct. How do you know what's priced in? If we rally to the 50%, does that mean it wasn't priced in? I don't know how to answer that. All right, Amadeus thinks it makes sense. Can I open a short position on NASDAQ for 2 months and watch it crash? September not a good month. And you can do anything you want, Coco. I mean, it's your trading account. We're still favoring lower prices. Is it guaranteed? Nothing's guaranteed. Am I bearish? Yes, I'm bearish. Can you open a short position? Sure, you don't need my permission. It's your trading account. That's why I don't give individual trading advice. I'd still manage your risk appropriately and position size it right. I wouldn't go all in on any bet in this market, even to the short side. You don't want to say, I'm betting 100% of my account that we're going to be at the lows by September. What if we're not? That'd be an idiotic trade. Can you take a fraction of your account and manage the risk appropriately for a short position? Yes, you can. And again, I don't know anything about your account. All right. Patrick thinks it makes sense. John, what news came? Again, I'm doing the live stream. I didn't see any NVIDIA news came out right before I started. Ooh. Again, this is why. What did we have? You know, this is people. I talked to a couple of people trying to keep going long NVIDIA. And I'm like, why? Well, it's near a bottom. Yeah, but why are you just going long? You're against the sector and both have reversal patterns. And look what else is now. Post-market, remember what else besides this double top pattern? What else? Come on. You guys should have the roadmap by now. We closed back on the 29th below the 62.5. What does that favor? The 87.5 to 100%. What are we now below? We're below the 87.5. It's already filled that statistical probability. The only thing left is this 142.84. I pretty much think we're going to hit it before a bounce. You'll probably get a bounce down here with people trying to buy the lows back from July before the next major rollover. Where's the SMH, by the way? I glanced at it earlier, but almost that's going to take it to this. Yeah, it's going to open probably tomorrow. Closer to the second target. Don't try to catch falling knives. This would. Could somebody put in what the NVIDIA news is? I'm curious. Clear as day, I'm actually playing KOLD in that very pullback play, and then I'm going in the UNG and short-term boil. Well, and as long as you have your plan and your trading plan, that is fantastic, Ted. You know, map out your trades and always manage your risk. I just like hearing how you approach this stuff. I'm trying to train my mind to think in the methodical, scientific way you do. Please keep sharing it. It's very helpful. And I'm also trying to share there's not one specific way you have to trade. You have to trade what's in sync with you, your account size, your personality. There's a lot of people who should not even day trade besides getting into possibly I'm going to wait for an intraday setup to get into a trade that's triggering on a daily basis. I think a lot of people shouldn't day trade. Unless, you know what? Unless there's some good futures day trading. There's some really good. I think more people should trade stocks swing to a longer term basis. I think a lot of people aren't suited for short-term trading and they're better to long-term trade and use long-term strategies. So I try to outline different ways you can do stuff or even trade around core positions. The way a lot more professionals do. Professionals aren't all in, all out. A lot of them, hey, I'm going to be bullish. Even what I showed you on those Apple pullback trades, you can maintain a core Apple position when it's in full-blown bull mode and unwind some into the rallies at your key harmonics or key levels. And then, all right, we got that weekly pullback trade I'm going to add back to my position. And then rally, unwind some. But I'm always keeping something on there. There's many ways to trade. So I'm trying to get through to people. Oh, could somebody report that garbage? I think we have trouble in this market because obvious levels get broken. I'm afraid I'm going to get whipsawed and don't take a trade at all. I get to break out at break even too early. Only thing is you have to be willing to accept risk always and manage your risk going into the trade and accept that that could be the loss going into it. And these are tougher markets to trade. There's no ifs, ands, or buts about it. So if you're more geared to trading bull markets, this is more the kind of thing that you want to sit out and learn. But the overall thing I also want you to get cognizant of is you manage your risk, you keep your risk clearly defined, and you accept your risk going into every trade. Because that's true no matter what. Ugh. Garbage. Got it. All right, you got it, George. How was that when Paul Pelosi sold? Day trading every day is hard. It is very hard. For those in here that are below the 25,000 limit who want to day trade, you can trade futures and options without worry. Yes. And you know what? I think you're trading a lot more futures, and you can trade the micros. Micro futures are a blessing, especially if you wait for great setups. You have such defined risk, and it's even in I bust on it being, low liquidity, but you can still get liquidity unless you're doing something stupid. And you just wait for the good setups. And if there are none, walk away. But micro futures are a blessing because you can really manage position size and take low risk in a super liquid. And I'm telling you, the S&Ps trade better than 98% of stocks intraday. And I could care less what you trade. I'm just giving you feedback. NVIDIA looks like new license requirement to ship to China. So thank you. Hey, George. Thank you for the super chat. Really everybody gives a shout out to George. All right, let's just glance at a couple more things. Then I said it was going to be shorter, and I've already gone almost an hour. DAX, you still have the potential double bottom. Long way off from triggering. Key support about 12,700. Notes, by the way. Notes. What happened? Close below 62.5. Guess what's over? That's why you manage your stops. Oops. That's why you manage your stops. Trade stop out. But if you position sized, you're fine. You take the loss and move on. What also happens now, though? Now, from the bullish side, sit on hands. We actually closed below this a couple days ago, but the stop's different on the head and shoulders. So I'm expecting it to return to 115.07. Then I'll be watching for another major bottoming pattern if it occurs. Other than that, it's trading from the short side now only until we get down in this area, from my perspective, based off the probabilities. So that's it. Dollar index, nothing. Double top, still valid. Just hold no daily rotation zone. We'll take a look at that tomorrow. Crude. Thank you for playing. Stop out. See? Can you have multiple stop outs at once? Yeah. Completely possible. Just nature of the beast. Does it change the probabilities? No, because you can also have multiple winners at the same time. Now we favor a return to these lows. And remember, we're still in long term. That was just a counter trend trade because longer term, we're still in bearish mode. And look, spike up into the weekly rotation zone. The rotation zone held. The slight bullish trade did not. VIX just an inside day today. So by the way, over the next couple days. If we don't break it first thing tomorrow, that's the key levels. I'm watching today's high and low for the next key areas with the inside day. This is running out of momentum to the upside. The Japanese yen will be interesting to see this. Euro tried to get a move on today. I was a little surprised, but we still have this with a little quick pop strength in there. Now looks like the daily rotation zone's out of the way, so a close above 100.90 triggers this double bottom, not yet confirmed. Slightly lower is against the weekly rotation zone, but that first target's going to be key. Bitcoin, still nothing. Double's still in play unless we make a solid rotation back down. Tesla, slightly lower low, another close below the 50. Still favors on any rally or rollover play longer term. Cycles are at the bottom, so at some point we're going to see some kind of pop. Well, there you go. Sterling stopped out of the notes trade today. Very good. Very good. Managed to stop. So what you do, take the loss and you move on. Trading isn't about getting all winning trades. It's about managing the trades. And when you hit profits, you take them. When you hit your loss, you take them, and you also manage your reward to risk ratio to make sure, combined with your winning percentage, that you have a positive expectancy. Does everybody know what positive expectancy is? Or do we have to cover that at some point? Because if you don't know what positive expectancy is, then you have a problem. Have to look at BBBY. Huge order on 45 calls for Jan 2024. Yeah, this is gonna... Oh, gosh. People just don't give up on this. On what? On the 45 calls? Are you insane? Even if this thing avoids bankruptcy, that's absurd. That doesn't even make... Wow. You're gambling that you're going to get a squeeze back to the June highs or the January high? That is a gamble. That's hoping for another mega squeeze on this thing. Even if you were playing on a squeeze play, I wouldn't be choosing that strike. That's absurd. Wow. Why wouldn't I be choosing that strike? I mean, that's a lottery ticket strike. Because if you're looking for a squeeze play, you're going to want your delta to kick in a lot faster. Because before your deltas kick in on that, you really need it to get some serious momentum. Other than like if you're just trying to go from a penny to 2 pennies. Who's trading this crap? Again, you don't have to be... You know what I learned a long time ago? You don't have to be smart to have money. See, that's just absurd. That's absurd, paying up that much. Was there an offsetting trade? Was there another strike that went off above that? Did they at least put on a spread, try to spread it out at least? I'll have to look at that. Yeah, look at that implied vol. See, you're paying up for that implied volatility. That implied, watch what happens. Monitor this. If this doesn't get a squeeze soon, watch what happens at implied volatility. Because that's going to crush that options trade. Let's say the implied volatility cut in half back down to 75. You're going to suck the premium out of those calls. That's an insane trade. To pay that kind of implied volatility. That's absurd. That's not even sensible for my book. Oh well. Takes all kind. That's what makes the market. See, until that crap goes away, we're not done yet. No offsets. Well, see, why would I suggest an offset with that? Because you're hedging your implied volatility then. Do I want to be naked at an implied volatility of 150% on a company that's most likely going to declare bankruptcy? Not in your life. Because you could rally up there. You could even get another squeeze play. And if implied volatility doesn't budge much, you're burning premium. If it's Ryan Cohen, I don't want to hear that name. Actually, that's not even sensible to juice this thing. If you wanted to start juicing it, you'd be playing with that. You'd be playing a lot closer to the price action. You would not be playing 45 strikes to juice this thing. Well, again, until we get friggin' regulators in this market. All right. Thank you, everybody, for sticking around. Is there anything else I wanted to cover? Nah, I think we've covered a lot. Let's just tune in tomorrow morning. Just a reminder. Always like to do one more reminder. We got 7:30, 1 hour before we got continuing initial jobless claims. We might get some reaction to that, especially with non-farm payroll Friday. And then remember, 30 minutes after the open, you got your ISM. 15 minutes after open, you got S&P Global. They're both manufacturing PMIs. The ISM is more important. So don't get caught off guard with that. With that, oh, look who's here. Late to the party, Warren. I already did Tesla, Warren. I'm done for today. I've been going for over an hour, and I said I was not going to go. Then please just watch the recap. You're late to the party. You're getting a tardy slip. I can't reward tardiness. Okay, everyone. It's okay. You're forgiven. You're not going to get the hall pass, though, next time. See you in the morning. Everyone have a wonderful evening. I'll be back tomorrow morning. And we will have Bob tomorrow afternoon to preview non-farm payrolls Friday. Thank you for being here, everyone. Talk to you later. Bye for now.